move on to your current business, Bequest Funds. So why don't you tell me a little bit about what you do, who you serve, and how you help?
Sure. So in 2013, I was looking for kind of the next venture to do after we sold our company. And what I landed on, I went to a local real estate investor club, and I stumbled upon a note investor. And what I learned is that you can buy mortgages in the secondary mortgage market whereby the homeowner hasn't made a payment in 4 or 5 years, and you can pick those up at a discount and work with the homeowner to create a payment plan to help keep them in their home.
Okay.
So I set off just to learn everything as I could about it, and really just kind of bought some mortgage loans and gave it a crack.
That's really interesting. I'm just thinking through from you, because I'm based in the UK, I'm based in London, and we would probably call it repossessions. So places that repossessions are slightly different, because repossessions are, from what I understand, properties where people haven't been able to pay and they're losing their property.
Mhm.
And in theory, you can pick up deals that way. But actually, the note investing is actually you're you're buying the mortgage. Is that right? You're in essence buying the mortgage, and what the owners pay you
Mhm.
to pay their mortgage off.
Correct. So how it works, how the whole sequence of events works is you have a bank that originates a mortgage for a homeowner, and over time, a portion of the mortgages that the bank originates go into default.
Mm.
Something happens in the homeowner's life, whereas they could have a divorce or lose their job or some health circumstance.
Yeah.
And so over time, the bank will go and bundle those into pools and sell them into the secondary mortgage market to
Right.
a hedge fund like ours. And the hedge fund has a decision to make when they purchase these mortgages. They can purchase the mortgage and get set up legal to start the foreclosure process, which is probably similar to the possession process in the UK,
Right.
whereby the bank goes, exercises the lien on the property, and goes through the court system to take back the property, so that the bank can now have a real estate owned asset called an REO, and they own the property. Or the hedge fund, like our hedge fund, and what I learned early on is it's more compassionate and more profitable from a long-term standpoint to do everything possible to work with the homeowner to keep them in their home
Mm.
and create a long-term cash flow stream for your company. That's how we operate our company.
So in a way, you're supporting the mortgage people who have gone through a difficult time, and are you guaranteeing their mortgage payments?
Yeah, so when we purchase the mortgages, we assume all the rights and responsibilities of the originating mortgage lender.
Right.
So we have the ability to go and create any kind of loan modification program that works. And what we do is we look to see what the homeowner can afford and try to match it with what our return expectations are for that mortgage. In essence, we're looking for a win-win where everybody wins. The homeowner can afford the payment, and we can accept the payment given what we need from a return perspective.
So if a mortgage is like 25 years or 20 years, something like that, left to pay, and they went through a difficult time, if they could only pay half the mortgage payments, do you pay the other half and then they then pay you at a later stage? I'm just trying to get to like
Mhm.
really understand
So
what your business model is, because are you paying their mortgage and then they pay you over a longer period the rest of their loan? Is that how
mhm.
it works?
Yeah, so close. So actually what we do is we modify the original terms of the loan, and we have the ability to do some forgiveness of debt. We have the ability to lower the interest rate, extend the mortgage term out.
Right.
So there's a lot of things we can do to set the homeowner on a new course, with their obligation. And so at the end of the day, once we get through that agreement phase, then the homeowner will pay us directly.
Right. Right. How risky is note investing?
It's risky. It's risky when, if you're not set up as a note business. So what that means is there's a lot in terms of compliance. There's a lot in terms of due diligence when you're purchasing these assets. So if you're not set up correctly, then you can create an astronomical amount of risk with note investing. But if done correctly, and if done in a compassionate way, when you're on the asset management side where you're dealing with the homeowners, then there could be you can mitigate a lot of risk, and it can be a very profitable business.
What inspired you? You said you met someone at a networking event that was doing note investing, but what was the inspiration after speaking to him that you thought you could do it? Actually, this is something that
Mhm.
I can do. What was the inspiration behind it?
Sure. So my thought was that I saw it as a way to make a lot of money in real estate without having to own the real estate property. So
Yes.
it was very self-interested when I started. And what I learned within the first year was that it was an area I tend to have a big heart in terms of just kind of, that's just my personality. So what I learned is I could be a great service to people and help them stay in their homes and create this long-term stream of income